Look, the S&P just broke its major uptrend line for the first time. That's not noise, that's a real wake-up call. Here's exactly what it means for your money and how to hedge smartly moving forward. We're seeing a clear disconnect. Costco crushed earnings, 12% revenue growth, stock drops 5%. That's your perfect setup. I'll walk you through 3 tactical hedges using semis, energy, and memory, whether to sell cost puts for income, and what you should do next to protect your portfolio. Look, here's what I'm seeing today. The S&P broke through its uptrend line for the first time in months, and before you panic, this is totally normal in every bull run. Doesn't mean we're crashing down here. Means the easy momentum is simply done. Momentum traders just cashed out their wins. The real question now is whether we bounce back in 48 hours or something deeper is shifting. And that answer, it changes absolutely everything about what you should do with your capital right now. Listen, I'm watching the market right now, and I think volatility is about to wake up. Here's exactly why that matters to us. When fear ticks higher, put selling premiums get fat. If you're building income the way I am, that's your moment. But understand, swings get faster when fear moves. If you're holding dividend stocks or dividend ETFs, you're probably sitting pretty. Panic tends to hit growth first, and growth is also the first to bounce back. So the next 48 hours, those matter a lot. Here's what I'm watching right now. SOXX, the semiconductor ETF, down 8% this month, and Roman 4 just spiked. That's classic. Tech sells first when the mood shifts, bounces first on recovery. Then there's USO, crude oil, sitting near $77 and it's sticky. That's your geopolitical hedge right there. And MRVL, Broadcom, trading like it just broke out of a box. Here's what I believe: any of these lets you hedge without sitting in cash scared. You keep exposure, stay active, stay protected. Look, cost just posted 12% revenue growth. That's real money. But the stock's down 5 this month. Here's what's happening. The market already knew Costco was a beast. That's all priced in. What they're pricing now is the valuation itself. At 26 times earnings, is that still safe in today's market reset? Probably yes. But here's the rub: the market's actively buying safety right now, not growth. That's the shift, and it means puts on cost are trading. That's your edge right there. Look, cost is on my CSB list right now, but here's what I think you should know. I'm waiting 48 hours before we actually move forward. The conviction is rock solid. This is a business you'd own for 10 years. The Roman 4 is rich, beautiful for selling premium, but the macro's foggy. We need to see if the S&P bounces above 5,800 by Tuesday or keeps rolling over. If we get that bounce, I'm hitting cost puts at $155. If SPY keeps falling, we wait. Here's what I'm thinking. I'm watching, but I'm not trading yet. Come Monday morning, I want to see if SPY retests that line. If it does, SOXX and USO become entry windows. MRVL becomes a buy. Cost puts land on my order list. But if SPY keeps falling, I sit tight and wait. You know what gets better as panic builds? CSB premiums, period. This uptrend break, that's not a crash warning to me. That's a clarity test. You get your answer in 48 hours. Look, the S&P just broke its major uptrend line for the first time. That's a real signal. When that line breaks, we don't panic, we rotate. I'm watching SOXX, USO, and MRVL as our defensive hedges right here. Now, cost reported, revenue up 12%, strong quarter, but the stock's down 5% on the month. That's your setup. That's not fear, that's opportunity. A company that crushes earnings and pulls back. That's where I'm looking to sell puts or nibble in. This is how we make money in both directions. Join us in the Discord, link below, and let's talk through your play.